TurboTax didn't become more valuable after 47 minutes. You just became less willing to leave. That's the trap. It's late March. You finally sit down to do your taxes. You see the word free, and your brain relaxes. You think, great, I'm not paying $200 this year, I'm being responsible. So you start. You upload your W-2, you answer the questions. You enter your social security number, your income, your address, your bank info, basically your entire financial life. And then, 47 minutes later, right when you're emotionally committed, TurboTax says something like, actually, based on your situation, you need to upgrade. Now it's not free, now it's $89. Then your state return costs extra. Then maybe there's another fee if you want to pay from your refund. And suddenly your free tax return costs $148, $169, maybe over $200. If the real price only appears after you've already entered your entire financial life, was that ever really a price comparison? That right there is the trap. Not that TurboTax never has a free option, it does. Not that paid tax software is always bad, it isn't. The trap is that by the time you learn free does not mean free for you. The company has already captured the most valuable thing you have, your time. And once a company has your time, it has leverage. Because at that point, you're not really deciding whether tax software is worth $148. You're deciding whether starting over sounds worse than just paying it. That is a completely different decision, and it converts way better. In this video, I'm going to show you the exact moment where free turns into paid, why smart people still fall for it, and the 3-minute test you should run before entering a single tax form. My name is Nick, and I spend way too much time thinking about the weird ways companies legally take money from ordinary Americans. And today we're talking about TurboTax. Not because tax software is the biggest financial problem in America. It's not. But because this is one of the cleanest examples of how a company can use confusion, friction, fear, and timing to turn. I'll just do the responsible thing into, fine, I guess I'll pay. Here's the thing. Most people do not wake up excited to file taxes. Nobody is sitting there in January thinking, you know what would really complete my weekend? Reconciling tax documents. Taxes are boring. They're confusing. They're intimidating. And for a lot of people, they feel high stakes. Because if you mess up your taxes emotionally, it feels like the IRS is about to kick down your door. Now, realistically, if you make an honest mistake, that's probably not what happens. But emotionally, that fear is real. So when a company says, we'll make this easy and we'll do it for free, that hits a very specific psychological button. It's not just saving money. It's saving stress. It's saving uncertainty. It's saving you from feeling stupid. And that is incredibly powerful. Because the average person does not really know what tax filing should cost. Should it be free? Should it be $40? Should it be $150? Should it be $400? Most people have no idea. So when a big familiar brand says free, your brain anchors on that number, zero. And once zero is in your head, every dollar above zero feels like a loss. That's the first part of the trap. TurboTax is not just selling tax preparation, it's selling relief. The product is not just tax software. The product is the feeling that you are safe from making a mistake. But there are actually 3 different meanings of free in tax filing. And this is where people get caught. There is free to start, which can mean you pay later. There is free for simple returns, which depends on the company's definition of simple. And then there are truly free filing options through IRS-linked or non-profit programs, depending on your income, state, and tax situation. The dangerous part is that all 3 can look almost identical when you're just trying to get your taxes done. The average person doesn't know these distinctions. They just hear free tax filing and assume it applies to them. And that assumption can get expensive. Because free usually means free only if your tax situation fits inside a very specific box. A basic W-2? Maybe. Standard deduction? Maybe. No investment sales? Maybe. No self-employment income? Maybe. No HSA complications? Maybe. No education credits? Maybe. But the moment your life becomes even slightly more financially interesting, that free door can close very quickly. Let me give you the normal version. Let's say there's a woman named Sarah. Sarah is 28. She has a W-2 job making $54,000. She rents an apartment. She has no kids. She takes the standard deduction. In normal human language, Sarah has a simple tax return. She's not doing tax strategy. She's not running some complicated business. She's just trying to file her taxes. Sarah sees Start for free. Great, that sounds right. She starts entering everything. The interface is clean. The refund estimate shows up. The platform keeps telling her she's making progress. Then, near the end, one little detail pushes her out of the free lane. Maybe she sold a few shares of an index fund because she needed $800 for a car repair. Now she has a 1099-B. In her mind, Nothing changed. She is not a trader. She is not a finance person. She barely thinks about that brokerage account, but the software sees investment sales. And suddenly, Sarah may need a paid tier. Now the price appears, and the internal debate lasts about 7 seconds. Do I really want to do this all over again somewhere else? That 7-second decision is where the money is made, because Sarah is not paying for tax strategy. She's paying for not having to restart. That is the product, not the tax form, not the math, not some secret refund magic. The product is relief from starting over, and that's why the timing matters. If TurboTax showed you the final price before you entered your W-2, a lot more people would compare. They'd shop around. They'd ask questions. They'd think. But if the price shows up after your personal information, after your forms, after the refund estimate, after the progress bar, after 45 minutes of effort, now the company is not just selling software. It's selling escape from frustration. Here's where this stops being a personal annoyance and becomes a national-scale consumer trap. Because if this happened to you, it probably didn't feel dramatic. You probably didn't call an attorney general. You probably didn't file a federal complaint. You probably just stared at the checkout screen, sighed, paid the fee, and moved on with your life. And that is exactly why this kind of thing works. Small enough to tolerate, big enough to matter. Repeated across millions of people. In 2022, Intuit agreed to a $141 million settlement with all 50 states and the District of Columbia over claims that consumers were misled into paying for tax filing services that should have been free. That settlement covered about 4.4 million consumers. Intuit did not admit wrongdoing. 4.4 million people is not a misunderstanding, that is a pattern. And in 2024, the FTC found that Intuit had engaged in deceptive advertising for TurboTax free tax products, although a U.S. appeals court later threw out the FTC's order in March 2026. So the cleanest way to say this is, regulators challenged the free advertising, the FTC found it deceptive, and the legal fight around the order continued. But from a consumer perspective, the point is pretty simple. Millions of people thought they were getting one thing and ended up paying for another. And when millions of people land in the same confusing pattern, that usually tells you something. The issue is not intelligence. The issue is design. Because when a system repeatedly gets people to misunderstand the same thing in the same direction, that's not just a customer mistake, that's a business model. Look, we usually talk about taxes as money you pay to the government, but there's another tax people pay every year, the sunk cost tax. That's the money you pay because you already spent time on something and don't want that time to feel wasted. You see this everywhere. You wait in line for 30 minutes at a restaurant, and even though the food looks overpriced, you stay because you already waited. You keep watching a bad movie because you're 45 minutes in. You keep a subscription because you spent time setting it up. You keep repairing an old car because you already spent $2,000 fixing it last year. And you pay TurboTax because you already typed everything in. The most expensive part of filing your taxes may not be the software fee. It may be the 45 minutes that makes you too tired to walk away. Now you might be thinking, okay, but my time is worth money. If I spend another hour looking for a free filing option, maybe paying TurboTax is actually worth it. That's fair. Sometimes paying for convenience is rational. But here's the difference. A rational convenience purchase happens when you know the price up front and decide the service is worth it. A trap happens when you're led to expect one price, invest your time, and then discover the real price when walking away is painful. Those are not the same thing. Imagine going to a restaurant with a huge sign that says free dinner. You sit down, you order, you wait, you eat. Then the waiter says, just so you know, free dinner only applies if you ordered plain rice. Since you ordered chicken, your total is $42. You might still pay, but you would not describe that as a clean, transparent transaction. You would say, why didn't you tell me this before I sat down? That is how tax software upsells often feel. Now let's do the math, because I never want this stuff to stay vague. Say you expected to file for $0. Then the final bill ends up being $89. Most people look at that and think, okay, annoying but not life-changing, and 1 year of $89 is not life-changing. But personal finance usually doesn't get destroyed by one giant mistake. It gets quietly weakened by small leaks that repeat. If you overpay by $89 every year for 10 years, and that money could have compounded at 7%, that's roughly $1,230. Not a mansion, but also not nothing. Now take a more realistic upsell chain. Federal upgrade, $69. State filing, $39. Then you choose to have the fee taken out of your refund because you don't want to pull out your card, and there's another processing fee. Now your free return might cost $148. If that happens repeatedly over 15 years, and that money could have compounded at 8%, you're looking at roughly $4,000. If you saw one bill for $4,000 labeled, "I was too tired to switch," would you pay it? That's how money leaks work. They survive because each individual decision feels too small to fight. If you've ever said, "It's only $89, that's fair." But how many only $89 decisions do you think quietly stack up over a decade? Tax software fee, bank fee, unused subscription, credit card interest, car loans stretch too long. Each one feels manageable. Together, they quietly eat your financial progress. And that's why this matters. Not because tax software itself is the biggest expense in your life, but because the habit of avoiding unnecessary financial friction compounds. Now you might be thinking, okay, but if it comes out of my refund, who cares? Look, this is one of the sneakiest parts. If I ask you to pull out your wallet and hand over $148, that feels painful. You feel the spending. But if I say your refund was going to be $2,146 and now it's $1,998, your brain often goes, cool, I'm still getting around $2,000. Same cost. Totally different emotional experience. That's mental accounting. You treat the refund like found money instead of your own money, but it was always your money. A tax refund is not a bonus from the government. It's your money coming back to you. And when a fee gets buried inside a large incoming number, it feels smaller than it is. The bigger your refund feels, the easier it becomes for companies to hide fees inside it. That refund number acts like camouflage. A $100 plus fee looks tiny when it's hiding inside a few $1,000s. And in some cases, paying tax preparation fees from your refund can involve additional processing fees, depending on the product and provider. So you might not just be paying for the software. You might be paying extra for the privilege of not paying up front. That is one of the sneakiest moves in the tax filing world. Because the person most likely to choose refund deduction is often the person who feels cash constrained. And the person who feels cash constrained is exactly the person who can least afford unnecessary fees. This is the part I really want people to hear. People who fall for this are not dumb. In a lot of cases, they're actually more conscientious than average. They care about doing things right. They don't want IRS problems. They want accuracy. They want peace of mind. And the fear of messing up taxes makes people willing to overpay for certainty, or at least for the feeling of certainty. That distinction matters, not actual certainty, the feeling of certainty. Expensive software does not automatically mean a more accurate return for a normal filer. If two legitimate e-file systems correctly capture the same forms and apply the same tax rules, the IRS does not care which brand had the better commercial. What people are often buying is convenience, familiarity, and reduced anxiety. Fear is expensive, and financial companies know people will pay to make a scary screen go away. You might see messages about maximizing your refund, or getting expert help, or audit support, or finding deductions, or making sure everything is accurate. And emotionally, that works. Nobody wants to be the person who saved $80 on tax software and then missed a $700 deduction. Nobody wants to get an IRS letter and think, I should have paid for the better version. So the upgrade starts to feel like insurance. But here's the uncomfortable truth. Sometimes you are not buying tax help. You are buying relief from a scary screen. This is where the trap gets personal. Because simple return sounds like it should mean simple life. And most people think their financial life is simple. You have a job, you rent, you maybe have a savings account. Maybe you bought a few shares of an index fund because someone told you to start investing. You're not rich. You're not doing anything unusual. You're just a regular person trying to file taxes. But tax software does not judge simplicity by how normal your life feels. It judges simplicity by forms, and forms are everywhere. Let's go back to Sarah. Sarah has a W-2 job. She rents, she has no kids, she takes the standard deduction. But last year, she sold a few shares of an index fund because she needed money for a car repair. Now she has a 1099-B. In her mind, nothing changed. She's not a trader. She's not a finance person. She's just a normal person who sold a small investment once. But the software sees investment sales. And suddenly Sarah may need a paid tier. In real life, Sarah's taxes feel normal. In pricing language, her return suddenly becomes complex. That is the moment people feel tricked because the ad said free. Her life feels simple, but the software says, actually, investment income means upgrade. And Sarah pays. Not because she made a bad decision, but because the language was vague enough to pull her in. That is the trap. Simple is not a feeling. It's a pricing category, and the company gets to define the category. Let's talk about the word free, because that one word does way more work than most people realize. Free does not just mean a low price. Free changes how your brain evaluates risk. If something costs $10, you ask, is this worth $10? If something costs $1, you ask, do I even need this? But if something is free, your brain often stops doing the cost-benefit analysis. You think, why not? Free removes friction. That's why free trials work. That's why free checking accounts can still make money through overdraft fees. That's why free investing apps can still make money through other parts of the business. And that's why free tax filing can lead to paid upgrades. Free gets you in the door. Then the business model starts. A free product is not always a gift. Sometimes it's the front door to the paid product. This does not mean every free product is evil, but you need to understand the game. When a company offers something for free, ask, what behavior does this free offer create? Does it get me to upload sensitive information? Does it make me emotionally invested? Does it make switching harder? Does it create an opportunity to sell me something later? Does it rely on me not understanding the details? TurboTax is not just competing on tax preparation. It is competing on inertia. Once your tax data is in there, once last year's return is saved, once your W-2 imports automatically, once you know the interface, leaving feels inconvenient. And companies know that. The first year you might pay $0. The second year you might pay $59. The third year you might pay $129. And by year 4, you don't even compare prices anymore because your prior year return is already inside the system. That is how convenience becomes dependency. And dependency is extremely profitable. Now you might be thinking, okay, but TurboTax is easy. I've used it for years. I don't want to switch just to save $80. Totally understandable. And this is where I want to be fair. TurboTax became popular for a reason. The interface is polished. The questions are easy to follow. The import features can be convenient. The brand is familiar. For many people, the product works. This video is not saying never use TurboTax. This video is saying do not assume TurboTax is free just because the word free appears in the marketing. There is a huge difference. If you knowingly pay TurboTax $129 because you value the interface and it saves you time, fine. That is a choice. But if you start under the impression that it is free, get surprised at checkout, and pay because you feel trapped, that is a problem. The issue is not paying for TurboTax. The issue is discovering the price after TurboTax already has your afternoon. Personal finance is not about never spending money. It is about spending intentionally. And intentional spending requires clear information before you commit. That is the standard. Not free everything, not anti-business, just clear prices before people invest their time. So what should you actually do? Don't wait until tax season panic mode. Before you enter a single number into any tax software, run what I call the 3-minute test. This test tells you whether you're walking into a free filing experience or a paid funnel. Minute 1. List every tax form you expect. W-2, 1099-INT, 1099-DIV, 1099-B, 1099-NEC, 1099-MISC, 1099-K, 1098-E, 1098-T, HSA forms, mortgage interest, childcare statements, anything related to stocks, side income, unemployment, student loans, education, retirement distributions, or health savings accounts. Minute 2. Go to the pricing page before you start. Not after. Before. Look for the exact forms supported by the free tier. Do not rely on the giant headline. Do not rely on free simple return. Find the details, because the details determine the price. Minute 3. Set your walkaway number. Say it before you start. If this costs more than $50, I am checking another provider. Or, if this requires an upgrade, I am stopping before I pay. Make the decision while you're calm, because the checkout screen is designed to meet you when you're tired. That is the key. Financial discipline is mostly about making decisions before your emotions get loud. And when you start filing, watch for 3 moments: the upgrade prompt, the state filing charge, the refund payment option. Those are the 3 places where free can become expensive. And if you hit a surprise charge, pause. Do not panic click. Do not tell yourself, I've come this far. That sentence has cost people so much money. Instead say, I'm allowed to leave. Because you are. You are allowed to abandon a cart. You are allowed to start over. You are allowed to use a different provider. You are allowed to say, no, this is not the deal I thought I was getting. Companies rely on consumers feeling trapped. The antidote is remembering that you have options. So where should people actually start? Start with the official source. Go to irs.gov and check the IRS filing options before you enter your information anywhere else. For the 2026 filing season, IRS Free File offers guided tax software for taxpayers with 2025 adjusted gross income of $89,000 or less. The IRS also says taxpayers above that threshold can use free file fillable forms if they're comfortable preparing their own federal return. And one important update, IRS Direct File is not available for the 2026 filing season, according to reporting confirmed after IRS communications to participating states. So do not build your action plan around Direct File unless the IRS brings it back in the future. If you want human help, Vita sites generally offer free basic tax preparation to taxpayers who make $69,000 or less, people with disabilities, and taxpayers with limited English proficiency. Starting at irs.gov changes the game because it moves you from advertising land into comparison land. Then compare the total cost before entering your data, not after. Before, federal cost, state cost. What triggers an upgrade? Whether refund payment creates an extra fee. Whether the upgrade is required or just recommended. That 5-minute comparison can save way more than people think, because a lot of people do not begin at irs.gov. They begin in a search bar. And once that happens, the first credible-looking result can feel like the obvious choice. But the first financial option you see is often not the option that saves you the most money. It is often the option that paid the most to be seen. That lesson applies way beyond taxes. Credit cards, loans, insurance, bank accounts, subscriptions. The first answer is not always the best answer. Sometimes it is just the best marketed answer. Now, the reason I care about this is not because tax software fees are the single biggest financial issue in America. They are not. Housing is bigger. Healthcare is bigger. Student loans are bigger. Childcare is bigger. Wages are bigger. But small traps teach big lessons. And the TurboTax free filing trap teaches one of the most important lessons in money. Companies are very good at monetizing confusion. They monetize the gap between what you think something means and what it technically means. Free, simple, no fees, guaranteed, premium, protection, max refund, instant, cash back, no interest. All of these phrases can be perfectly legal and still misunderstood by consumers. And when millions of people misunderstand the same thing in the same direction, that's not just a consumer problem. That is a design problem. A good financial product should not require you to read like a lawyer just to avoid being charged like a customer. A good financial system should not require everyone to become a tax law expert just to avoid paying for something advertised as free. But until the system improves, you need to protect yourself. And protection starts with skepticism, not cynicism. Skepticism. Cynicism says everything is a scam. That is not helpful. Skepticism says, what are the incentives here? That is very helpful. When you see free, ask, free for whom? Free until when? Free under what conditions? What happens after I start? What information am I giving up? How does this company make money? Those questions will save you more money than almost any budgeting hack. Let me give you 2 examples. 2 people, same income, different behavior. Person 1 is Marcus. Marcus makes $58,000 a year. He has a W-2 and some bank interest. He starts filing with the first software he sees advertised. It says free. He clicks. Halfway through, he sees an upgrade prompt. He is not totally sure why. He clicks continue. Then he sees state filing costs extra. He clicks continue. Then he gets offered audit support. He is nervous. He adds it. Then at checkout, the total is $167. He is annoyed, but he has already spent an hour, so he pays. He tells himself, whatever, at least it's done. Person 2 is Elena. Elena also makes $58,000. Before she starts, she gathers her forms. She checks whether her return qualifies for a free filing option. She compares 2 services. She decides that if the first option tries to charge more than $40, she will leave. She starts the return. When she sees an upgrade prompt, she stops and reads why. She realizes the upgrade is optional for her situation. She declines. She files for free or for a much lower cost. Marcus and Elena may have the same income. They may have the same intelligence. They may have the same financial goals. But Elena has a process, and process beats panic. Most people do not need more willpower with money. They need fewer decisions made while frustrated. You do not need to be a tax genius. You need a checklist. You need a price limit. You need enough confidence to walk away when the deal changes. That is it. Let's be practical. Sometimes you should pay. If you have self-employment income and need to track business expenses, paying for better software may be worth it. If you sold investments and need help importing transactions, maybe paying is worth it. If you moved states, worked in multiple states, had rental income, sold a home, exercised stock options, received K-1 income, or have a complicated family situation, paying may be worth it. And in some cases, you should not use consumer software at all. You should hire a qualified tax professional, especially if the tax decision affects thousands of dollars or future years. The mistake is not paying. The mistake is paying without understanding why. So ask, what exact tax form or feature requires this upgrade? Can another provider handle this for less? Is this upgrade required or optional? Is the fee higher because of my actual tax complexity or because I clicked into an add-on? Would a human tax professional be better for this situation? That last question matters, because there is a weird middle zone where people pay hundreds of dollars for software plus add-ons when, for a bit more, they might get actual professional advice. Or they pay hundreds of dollars when a lower-cost product would have done the same thing. The answer depends on your situation. But the question itself is valuable. Paying is not the failure. Paying blindly is the failure. Look, I know this can sound petty, it's just tax software. It's one fee, it's once a year, but your financial life is shaped by moments exactly like this. Moments when you're tired. Moments when a company uses vague language. Moments when just finish the task feels easier than stopping to think. If you get stronger in those moments, your money gets stronger too. Not because you became perfect, because you stopped volunteering for avoidable losses. So if you've ever clicked on free, gotten all the way to the end, and then felt weirdly guilty for paying when you thought you wouldn't have to, that reaction makes sense. It wasn't just you. Millions of Americans ended up in the same pattern, and regulators took action because the free pitch misled consumers at massive scale. So next time, start earlier. Start at the official source. Compare before you commit. Know your walkaway number. And if you do pay, pay on purpose. Because the biggest upgrade in personal finance is not just earning more. It's seeing clearly. The person who saves money is not always the person who earns the most. Sometimes it's the person willing to close the tab. If this helped you, hit the like button, subscribe, and send this to one person who is absolutely going to wait until the last minute and type free tax filing into a search bar like nothing bad has ever happened before. They need this video. And honestly, we've all been that person. I'm Nick. I'll see you in the next one.